How's Andrew? How are you doing?
Well, and yourself?
Yeah, good, thank you. It's great to have you here again. Today we are going to be looking at provisional tax and all that goes with it. So let's get straight into it. And that is with the first question being, what is provisional tax?
So provisional tax is basically a method of contributing towards income tax by filing separate tax returns as required by SARS. What that basically means is that provisional tax is not a separate tax from income tax. It is, if you adhere to SARS's metrics for provisional tax, then you need to submit provisional tax returns on top of your yearly income tax return.
Okay, brilliant. And tell me, who needs to file for provisionals?
So anyone that receives an income apart from salary, to which pay earn has already been deducted, will be seen as a provisional taxpayer. Therefore, salary, people receiving a salary will not fall within the provisional tax criteria. Provisional tax is normally if you have an income source such as interest, foreign dividends, if you rent out a property, if you trade in crypto assets, or if you have sole proprietorship to which you have a business in your personal capacity, then you need to file provisional tax returns.
And then we're looking at when does it need to be filed and paid?
So there are two provisional tax returns that's filed during the tax year. The first provisional tax return is due 6 months after the tax year starts. So for individuals, that will typically be August. The first provisional tax payment then is due on the last business day of August. And then the second provisional tax return needs to be filed 6 months after the first provisional tax return was filed, which will then be February. And that second provisional tax payment will be due on the last business day of February. There's also a third payment that is voluntarily there. So that payment is due on the last business day of September.
Okay, and why has this process been put into place? Can it not all be included in the standard income tax return?
So provisional tax is to the benefit of both the taxpayer and SARS. It firstly assists the taxpayer with cash flow. With that being said, provisional tax payments are done throughout the year. So it eliminates the risk of one large payment when you file your income tax returns. It secondly helps with tax compliance. So with multiple submission dates, it ensures that payments are done on time, which contributes to tax compliance, and it also helps with under-declaration, which will lead to understatement penalties for the taxpayer.
Okay, brilliant. And lastly, how does one go about filing their provisionals?
Provisional taxes can be filed electronically through e-filing. With that being said, provisional taxes are calculated on your estimated taxable income. So just important to note there is that accuracy is required when filing provisional taxes. So if you have a taxable income of less than R1 million, then 90% accuracy is required there. Taxable income above R1 million, accuracy percentage of 80% is required. If accuracy is not met, then once there's a levying of understatement penalty on that taxable income. So if you're at all unsure about how to file provisional taxes, it's always best just to consult with a tax practitioner.
Awesome. Thank you so much for sharing. I really appreciate it.
It's my pleasure.